Will Robson, you are Global Head of Real Estate Solutions Research at MSCI. Thank you for joining us on BiTV.
No problem. Thanks for having me.
Starting, what are the main trends emerging from the most recent MSCI UK quarterly property index?
Well, it's interesting because in some ways there's a bit of a change, and other ways there's not much of a change. So, in terms of a profile of total returns, it looks like there's been a bit of a bounce back. So total returns are now back just about in positive territory at 0.1%. But actually, if you think about movements in capital values, we're still in negative territory. So it's still falling values, but less quickly than they were in Q2. So it looks like a bit of a V-shaped profile in the total returns, but it's not as positive as that would suggest. When it comes to the similarities with previous quarters, I think the same kind of trends are still there that we've seen for the last couple of quarters or longer. So definitely the ranking of the sectors is the same. So retail, by far the worst performing, but that's been around for 2 or 3 years because of headwinds around e-commerce. Industrial is still at the top, and offices kind of in the middle.
Okay, and you talked a little bit about somewhat of a bounce back. How do you explain this? I don't know if recovery is the good word, but how do you explain this phenomenon compared to the previous trimesters during this economic crisis?
Well, I think the first quarter of the year there wasn't much, because the real impact of coronavirus really hit at the very end of the quarter. So valuation was kind of baked in by then. We saw more of an impact in Q2. But even then, it was kind of low single digits in terms of capital value movements at the all property level. I think since then you've had kind of recoveries in the equities market and just general kind of improvement in sentiment across broader investment markets. And in Q3 you've had a little bit of a pickup in transaction volume, and so the evidence and the for kind of weak sentiment has kind of gone away to some extent. But that said, we're still in a position of falling capital values in most sectors, even in Q3. Now that might change a little bit as we go forwards, because we just had the news around the vaccine, and obviously you've had kind of further recoveries in equities markets and some of the listed property sectors. But at the same time, you've got furlough schemes and government support across many countries, and until that winds back, we don't really know kind of what the broad economic impact is going to be and how that flows through into real estate cash flows and valuations.
How does the British commercial real estate sector's performance compare to its European counterparts in general, and to France in particular?
Well, for Q3 data, we're just kind of getting some countries in at the moment. So we've had the likes of the UK and the US and Ireland, but the data up to Q2, you've had a pretty similar profile. So Q1 wasn't really too bad. You had a step down in Q2. The markets that we have seen published in the UK, Canada, Australia, US, Netherlands, they've all had a bit of a bounce back in Q3. That said, it's kind of a recovery, as you said. It's kind of a deceleration in capital value falls in most countries. In France, we have a biannual index, so we've got data up until Q2. The returns did decelerate to Q2. It wasn't quite as bad as the UK, and we still stayed in positive territory for total returns. So it's kind of a bit more muted in reaction to the UK. Ireland is a bit more, it tends to be more of a volatile market. So I'd say broadly, you've got the same kind of profile and returns at the aggregate level, and you also have the same kind of rankings across the sectors. So definitely retail, the worst affected, and within that, shopping centres tends to be the worst. Offices not too bad, and then industrial generally is performing well everywhere around the world. So it's the same kind of broad structural changes and headwinds and tailwinds affecting markets around all global markets.
Great. Well, thank you very much for this insight, and thank you all for joining us, and see you soon on BiTV.